Hello, welcome to FinTech Impact. I'm your host, Jason Pereira. Today on the show, I have Andrew Jamison, founder and CEO of Extend. Extend is a platform that sits over top of traditional banks to offer new extended capabilities and powerful tools for payment processing and management for corporations. And with that, here's my interview with Andrew. Andrew, thanks for taking the time today.
No, thanks for having me on the show, Jason. Excited for this one.
So, Andrew Jamison of Extend, tell us about Extend.
We are quite simply a platform that aims to deliver spend and expense management capabilities, right, to emerging middle market businesses that are looking to drive more automation through their business.
Okay, we're going to dive into the how and how you work in collaboration with existing banks in a moment. But let's go into the origin story. How did it come to be?
Came to be in an unusual way. I'd always sworn I would never be an entrepreneur for the simple reason that my father was an entrepreneur and set up 3 or 4 different businesses over time. And I was like, not sure I want that kind of life. And largely because it's spilled over into weekends, it's spilled over into vacations, it's spilled over to everything that we did. It's spilled over into my vacations where we went to the warehouse to pack boxes and do all sorts of stuff as free labor. But in my case, I just happened to be in a situation where I took time off from work because of health issues with my mother. And I chose, and luckily had the full support of my wife, to go and take a sabbatical. And sabbaticals are dangerous, right? Because they let you think. You can really literally have time to take a break from routine and really focus in on what it is that you like to do. It's the introspection moment, which you never have a chance to do when you're busy with a job. And really centered me on saying it was time for me to move on and time for me to think about doing something different. The more I challenged myself, the more I realized I wanted to be solving client solutions, going back to more that consultancy approach I'd done for 10 years prior to my 12 years at Amex, and really focus in on how could I build better experiences, better workflows that really help to solve the daily challenges of the finance teams I've been supporting in different ways, whether as an ERP consultant or as a product manager at American Express, just solve it through more software and through better workflows.
Okay. So we'll talk about what those workflows are and how you're going to help with that. But let's talk about the experience of the platform, right? So it's not like people are signing up for the Extend platform directly, correct? Like you are basically working through traditional distribution. Is that not the primary case?
We distribute everything we do really through our bank partners. We have not been selling direct to end customers. We are strong believers that the banks have the strongest brand out there. You notice that, especially when you get to difficult economic times. The reality is people fall back on their banks pretty quickly. The banks are used to seeing peaks and troughs in their businesses. They're used to supporting businesses through hard times. They are time tested. They are challenge tested. I think that the reality is that's what customers tend to revert to when things get challenging. Our view was that I want to leverage the power of that brand rather than trying to build my own brand, my own credibility and underwriting, realizing that I think that was going to be a difficult value proposition to build out on. As we decided very simply to say the best way to go and deliver this is actually over the top of an existing relationship, hand in hand, delivering that experience with bank partners that we go live with.
And it solves a lot of problems for you. You address some of them. Customer acquisition costs in the fintech space is pretty enormous and substantial, right? It takes an enormous amount of advertising to gain market share and mind share first, market share second, versus just going to the organizations that already have the customers. And also, this is something that what we're talking about is largely, I won't say specialized. Like it's not a core offering to major financial services institutions. So it's not necessarily something they're ever going to develop in-house. So you are extending their capabilities. Again, great name because it applies in so many different ways. You're extending their capabilities they can offer their subset of clients by giving them something of value.
That's exactly right. It's almost like we're all sticking to our swim lanes of strengths so that we can essentially get to the right solution faster. And for us, that's about building innovation, building software. Banks are typically not great, right, at building software. They're typically challenged in trying to sell software because effectively they're there to provide lend and debt. That's where their forte typically lies. And that's really where we play off and say, you continue to go down that path and provide that experience around servicing those customers. Let us build, right, some more complicated workflows that get more complicated the bigger the business that you go and support. The consumer is kind of the easiest use case, and small business, middle market, large market, enterprise, the challenges get bigger because typically there's just simply more approvals required along the path or more insights required along the journey. in order for you to deliver a solution that meets the needs of those customers.
Okay, so let's talk about in particular about what we're talking about in terms of the workflows and what you're trying to enable. So give me an example of a small to medium-sized business who basically now gets offered your service through a traditional bank. What problems is it solving specifically for that?
So if you go back in time, the idea that you could register and get access to, for instance, virtual cards. And so let's talk a little bit about the benefit of a virtual card for a small business, right? I might be a digital advertising firm. I might be a law firm. I'm dealing with a lot of pass-through expenses, right? Whether it's I'm actually trying to place ads on Google or Meta or Microsoft platforms, and I'm running multiple campaigns across multiple customers, I've committed to budgets for those customers that I will not exceed, right? The use of virtual cards helps them to do many things: control the budget, helps them understand which charges are going back to which customers so they can rebill them faster, but report also on the effectiveness of different campaigns across different mediums. And so we essentially got to market and said, actually, I'm going to give you access to these powerful virtual cards, not because you're going to have to walk over to your bank and apply for a new product and essentially then be implemented for that product. We changed the game there and said, no, no, no. This is now a feature that comes embedded within the card that you already carry, the contract you already have with your bank. And so creating that instant access was a real change in the marketplace. It suddenly meant this technology that had only really been available to the biggest of companies because it was resource constrained from a bank trying to deploy it, suddenly was no longer resource constrained. And so we could go and hit up all these different use cases that straddle travel on some case, right? I have some employees who don't have a card. I have some contractors that work for me who I don't want to give a permanent card to, all the way through to operational pieces. I talked about pass-through expenses, but you might be a franchise business running restaurants or different gyms, and you might want to make sure you can allocate costs, right, across different locations. And so really you're solving for an awful lot of use cases that are already out there in the market that were causing headaches, right, across many, many different businesses. And so that's really what we did, is to say, no, it's now available in minutes, in instants, right, over the top of your existing product. That was the first thing that we went about. And as we collected all this data, these customers said, this is great, but I also need to account for this data, right? The CFO needs to push this information into my ledger to close out the books. And so we started working on bringing expenses and classifying those expenses and automating that process to push it into their books to help them close month end faster. And then I was saying, hey, this is working fantastic across all these cards that you helped me to create. But what about my physical card transactions when I use my piece of plastic in the store? Can you bring that all together to now give me one experience over my digital cards, my physical cards? And so that's really the piece that we've just launched now, is to say, I'll offer you the holistic suite of capabilities, which is really spend management, which is really the upfront controls that you overlay on cards that you issue, right, digitally, physically. And then expense management is the compliance piece that happens post-transaction, which is, hey, are the receipts there, the invoices there, right? Have we allocated these correctly? Are you enabling me to capture also some out-of-pocket expenses? And then can you help me please with pushing this into the books? And that's where we get into sort of some of the sophistication and automation that gets really exciting, because everyone loves to talk about AI. Everyone loves to try and land the plane around what are the real use cases where we're going to see this tremendous efficiency. The reality, AI and agents like nothing more than a rule book. And the beauty of accounting is it is exactly that. It's a rule book. And so you can really start to think about the future here of how you have the agentic bookkeeper that is just applying the right rules so that you essentially have transactions flowing through seamlessly into the back end.
So there's a lot there. And like what you discussed, with the exception of the new AI agentic accounting, there's been platforms that offer this third party, right? Plenty of them. And you could choose the collection of a bunch of them to do one or two specific things you discussed. But the ability to do that was always predicated on things like connections to banks, whether it be through data aggregations or data aggregator or screen scraping, whatever else it was. There's always potential for those things breaking. And it's a non-native experience, right? That doesn't go back to the original file of the actual transaction itself. You're literally closing the gap. You're the final mile there. You're literally tying it to the original transaction. Talk to me about what kind of advantage that plays for you.
I think everyone always wants to have, right, clean data, it's garbage in, garbage out, right? And so the reality is, if you can securely say, I'm going to make sure that whatever information you add at the beginning of this journey is systematically given to you at the back end of the journey, where you gain the automation from that information. That's a huge benefit in this game. And I think you're right. There's lots of players out there. There's plenty of players who focus on the expense side of things, right? Which is post-transaction, what I do with this, all of these transactions. There's definitely been some players that came into maybe more the AP side, accounts payable automation, with virtual cards helping to settle invoices. But where you're seeing the noise now is really through these neo processors and card issuers, who effectively are saying, I'm going to upend the whole banking system by essentially launching a bundle service. I think where the banks lost out in the past is they had solutions, but they were disparate solutions with different IDs and different logins, and created effectively a spaghetti junction of solutions that were just not well integrated. I think that's where the new players have come in and say, no, no, no. The new game is spend and expense, and it's in one application. They've redefined what the game is. And that's really where we're helping banks, is to say, let's unify all of this. And let's make sure, as we unify all of this, that we really focus in on the elements that are going to drive the promise of automation on the back end for the finance people.
Okay. So absolutely, being closer to the source is always advantageous. Talk to me about, from the end user perspective, when they're onboarding as a business, what does that experience feel like?
So that's where we focused most of our attention. One of my bosses famously said to me, as I came out of the sort of core systems that I mentioned, I worked alongside SAP for 10 years. And most of the work I did when I was in Rex Westwood was really focused on large and enterprise customers. And I remember one of my bosses came up to me and said, Andrew, this is all fascinating, but can I just tell you, this stuff makes my hair hurt. And largely what she was basically saying is, it's highly complicated. And the reality is, business to business is complicated, which is why many of these embedded solutions haven't come to market that quickly, because it's this complicated workflows in and around it. And I think I took her challenge and said, great, I'm going to focus on the lower end of that, the SMB side of the side of the equation, the SME side of the equation, where we can truly make this a consumer-like experience. And I think that's probably where we've had the biggest impact, where we get the biggest feedback from our customers is, you know what, it's as simple as pulling out my card account in my hand and essentially just enrolling as if I was a consumer, to seamlessly be able to opt in for different functions and create essentially the ability for me to do this syncing easily with my QuickBooks and my NetSuite applications. I don't have to recodify anything. Everything lands back into our application. And then once you've done all the work in there, it seamlessly goes back into the other side. So I think it's really about, how do you remove the 20 steps from that user? And it starts in that SMB segment. I do think the SMB segment also has somewhat been lost and forgotten over the years, because everyone focused on the rich sort of consumer, and then people looked at big corporations and businesses, and the middle child was the middle market. And I do think these neo issuers and neo banks have zeroed in on that as a really interesting segment that's been underserved with automation, with integration, and really said it also is a very profitable segment, because they're bigger than consumers, smaller than enterprise, so they don't have the negotiating power, and so the margins are pretty healthy there.
Of course, where there's more money is the more marketable thing you want to go after. But also, again, this goes back to the legacy of the traditional carriers and the way that they would handle and have to deal with AML and account opening, all the other due diligence necessary for a small to medium sized enterprise, was almost as much work as it was for the large enterprise. So the ROI was not there, and they are not exactly the greatest at digitizing outside of their core competency. And I'm being as polite as I can be with those words. But the reality is that it was not going to be profitable for them. So they literally gave away a market. And in a lot of ways, fintechs came in there thinking that was their opportunity in the disruption theory window to start chipping away at major financial institutions. And you basically have given them, in a lot of ways, a way to, for lack of a better term, fight back, if not at least get close to table stakes for what these other institutions are doing.
No, I think you've absolutely hit the nail on the head. And I think a lot of it is linked to aspects like PSD2, which sort of said it's client data, they own it. And in Europe, it really took off really quickly, which is really about these APIs suddenly became more open. And with that came this sort of revolution in technology. And I think that's why we've suddenly seen people who've been able to accelerate in building these experiences because they have no tech debt, right? And quickly you can get things up, running and scaling. But then you get to a certain point, frankly, where maybe you cut a few corners. And I think that's where the transition for these other businesses comes. So like, how do I transition to truly be a true massive scale business? And they start having the same problems actually that the banks will have over time, right? Because they've reached that level of scale themselves, right? Where they had something in mind around a specific segment, but they've now bled into smaller and they've bled into larger, and they start having those same problems. I think for banks, it was really linked to the fact that the underlying card infrastructure was designed for consumer, bolted in small business. And then they designed a whole separate infrastructure, even though 85% of the capabilities are the same, for large market enterprise and middle market. The problem is great, but what if I'm straddling from small business into this other ecosystem? It was a horrible process for these customers to go into that new ecosystem. Unfortunately, exactly what you said, you needed a computer science degree as a small business with a VP of finance that does 15 different things to actually try and run this thing. It was built with the idea that you would have a team of 5, 6, 10, 20, 30 people running this program and infrastructure. And guess what? It doesn't really work when you're a sub 200 people organization and you have really small functional departments supporting it.
No kidding. And the thinking of how it was consumer first and business was an afterthought. That is nowhere more evident than in the complete and total lack of intelligence gathered at the point of contact, right? To a consumer who's spending money, them knowing what they spent it on, where they spent it on, beyond just basic reconciliation of, okay, I spent that money at that place, is basically like a novelty, right? Whereas it's to a business, it is a requirement, right? Not only should I know where I spent money, but I should know what I spent it on. And wouldn't it be nice if the actual full invoice flowed through with the transaction and right into my accounting software? But that was never contemplated at all, right? Or even something as simple as carving out the VAT as a separate line item, right? Like you think about how much money and time that would save around the world if payment systems could do that. It is bonkers. It's absolutely bonkers, but it was never thought because consumers don't have the same requirements, privileges, whatever else it is. And if any consumer is not scratching their head about why this matters, pull out your bank statement and tell me if you can make sense of most of the transaction items, right? There's no standardization around that. People get to put in whatever they basically damn well please, right? But yes, it comes down to my accounting is every month. But if you're someone who's doing it once a year or once a quarter or whatever the heck it is, good luck remembering what that really weird transaction name was from 3 months ago.
Well, and I think also, because obviously as a consumer, you have to do your taxes, but the whole compliance piece around businesses is completely different. And so you have to adhere to all these different things that as a consumer, you don't even think about. And I think people often overlook that actually is the complexity truly in running a business and the steps and compliance components that fit into it. And I think that's an element there where we try and help and say, okay, let's recognize that as you grow as a business, you have different needs, but also you have a need to stay nimble and to benefit from automation because effectively you don't have the working capital or the capital full stop to go and hire bigger teams, right? You're just a middle market business.
Yep, it really is. And basically the amount, again, wasted time. If we had just designed better systems from the get-go that were actually built for purpose, this would have been solved. But it was a afterthought that we all pay the price for now, unfortunately.
But I think that's truly what's exciting today, right? Access to technology is becoming easier. We're starting to see some step changes across all of this. The fintech bubble that occurred from whatever you want to call it, 15 through 21, helped to move the banks along as well. The field has been pretty much level since then. But I think the banks were forced into a space where they had to invest and really focus on these different aspects. I think the net beneficiary are the businesses that now get to benefit from these tools, right? The question is, how much pressure can businesses continue to put, right, on those banks? And I think there are definitely some of these neobanks and neoissuers that have reached big enough scale where the pressure's now real. It's a sustained pressure because they're sustainable businesses. I think that's why we're seeing this great evolution that will continue now and really deliver real benefits, right, to the middle market customer base that certainly we're looking to support.
Yeah, just quickly looking at the numbers on Revolut alone, we're looking at like 18 million personal users and over 500,000 businesses worldwide in 20 some odd countries. The scale at which they grew and the number of countries in which they grew in is unprecedented. And they're by no means the only example of that, right? And that was solely these opportunities exist for large institutions' ability to service that market properly in a way that was meaningful.
I think there'll be benefits actually across the large market as well and enterprise. I think there was certainly a phase in time, and I go back again to my ERP days, it was all about ripping and replacing, right?
Mm,
The new version of that is abstraction, right? Which is recognize actually there are some technologies out there that's old. It acts like a ledger. The ledger's a ledger. It's like an abacus. It hasn't evolved an awful lot. What really needs to evolve, right, are some of the components sits over the top of it. And so what I've seen more and more now is this whole transformation towards, right, the abstraction of these complex layers and really creating different compartments of experiences, right, where you essentially can go and improve the process overall for those clients. And that's where you can also start to piecemeal different providers to actually go and fill those different services in a pretty clear way. Now, obviously, it all benefits if you have an infrastructure that allows the single sign-on and all these different things. But again, I think we're getting there. The bigger you are, the more painfully slow it is. And things always seem easier for the ones downstream from you, upstream from you, whichever
yeah.
way you're looking.
Well, let's also talk about incentives. At the end of the day, traditional mainline financial institutions are rewarded for stability, paying the dividend every quarter and growing that on a regular basis, as opposed to the venture cap backed startups who are incentivized for growth as fast as possible. Very different incentive structures at play that really permeate throughout the entire corporate culture and decision making process.
Different risks, right? I would say different risk profiles for sure.
Absolutely.
And I think that's reflected a little bit in the speed is the risk tolerance across those types of organizations. And that's why there's a benefit of getting to a certain size, right? It's easy to do it as part of a small infrastructure. And obviously as you get bigger, those things get more complicated. I think the real question mark, and this is one thing we've learned over the course of the years, is if you know you're serving those really big players, don't cut corners, because certain things are never going to be overlooked, whether it's through their vendor onboarding process, whether it's how they look at personal data and information, whether it's to do with sanction screening and other compliance aspects, right? So the advice I would have out there is if the industry you're going to serve is ultimately going to be through these really big major institutions, right? Make sure that whatever framework you create, whatever infrastructure layers you build, they are certainly built and designed in such a way that these things plug in, because there's going to be no getting around them.
Yeah. And I would say to sum that up, move fast and break things does not work for those institutions whatsoever. Playing it coy like that ain't going to get you started. And I've seen very few institutions sell into, very few startup organizations sell into mainline institutions in the first couple of years of life. And part of it is because they just think they can, there's a bit of fake it till you make it on all that. And I ain't going to fly. They ain't going to fly with those parties. You have to be institutional grade by the time they buy you. Otherwise, you're not getting bought.
I think you have to be institutional grade, actually, even pretty much at the point you start a partnership. Right? People often say, so how long has your business been around? We've been around for 8 years. But I would argue that the first 4.5 of those was building institutional grade capabilities, right? Getting through the contracting process and the vetting process with those big institutions, whether it's the card networks, the card processors, the issuers themselves, right? These are all giant companies, right? That you're having to part and run through a whole bunch of trap doors to satisfy those pieces. And I think now we start to really benefit from being able to scale, because we're essentially contracted with all those parties. And essentially now we can start to really gather momentum because we have access to the data feeds that come from the source, to your point. So the quality of the data is higher. And we benefit actually from, importantly, from their authorization and risk models, right? We're not having to build our own. We're leveraging the fact that those institutions have really solid, right, customer service and fraud and compliance pieces. And so when you bring up and say this happened, right, there's a whole army of people behind the scenes making that happen. And I think that's harder when you're a fintech and trying to do your own underwriting and try to do your own servicing, right? You don't have the scale, the infrastructure, the experience necessarily, the years of data that help you understand what the right models are. So I think that's why I think there's You either try to scale hard initially, and then you get the benefit of having built those partnerships, or you start really early and get early traction, and then maintaining momentum becomes really hard if essentially you're trying to build your own brand.
Yep. So that's what you built to date. You alluded to some of the future regarding agentic accounting and other stuff like that. So where else do you see this going?
Look, I think the companies that we deal with, right, are increasingly pushing us towards more of this automation. And I think it's about pulling together card management. It's about pulling together data. It's about pulling together accounting. It's about pulling together insights. So I think that the spectrum just continues to grow over time. And then it's really about how you overlay, right, either a better experience to it. And that better experience, by the way, can be, it's not a user experience we built. It's not a user experience the bank built. So I'll give you one example, and that's the partnership that we struck with SAP Concur on the invoice side, was to actually recognize that those clients had bought that platform as a tool to help them make purchases, essentially get invoices, but eventually then pay those invoices. And the reality was for us is to recognize that the clients, that's the experience they want to be in. And so really what we built there was a plug, right, that said, I'm going to allow you to do everything that really happens in Extend. In other words, you register your card, you essentially certify and authenticate yourself as that user, and then you can start issuing virtual cards, and then the virtual cards goes to the supplier. We are under the covers, the partner that delivers that service across the bank partners that we're bringing on board into that ecosystem. So the future here is where consumers already gone, which is the concept of embedded. I think the future here is about embedding in the B2B space, knowing that it isn't a mobile phone anymore. It could be a Concur platform. It could be an Oracle platform. It could be any other platform that they're using for procurement or for payments or whatever else it is. I think that's increasingly where it's going to go, right? HRS platforms that recapture all of the employee details. So why not capture all their payment details and their card details, etc. So I think that's one big part of where this starts to go. And then I think we do truly end up in the not too distant future with the whole sort of touchless aspect of you approve an invoice goes through a workflow, it gets approved, it gets paid, and then the accounting's happening systematically in the background, again, because it's following rules, it's following patterns that have happened in the past. And so really what you're asking the human to do there is to review the work that happened rather than actually doing the work. And I think that's the promise we've been talking about. I think what we're seeing, though, is that the concept of embedded was way more complicated in B2B because there's so many more platforms in play. I think then the idea of the agentic bookkeeper is really looking at things that people do, where there's truly a foundational set of rules that can drive towards that automation and simplicity. So those are two big areas where I get really excited about and where we're going to be looked ahead over the course of the next couple of years.
Good. I'm sure it will come about because frankly, things are moving quickly. All right. 3 questions I asked before we end the interview on a positive note. First question. If you had one wish for something to change in your industry or in your company or the industry as a whole, what would it be?
I'd say as an industry, it has taken too long, right, for trust to exist between fintechs and banks. So if my wish could change anything is to say, hey, is recognizing that you can't be all things to all people. I think we're getting there now, but if I go back in time, that's the one thing I could have gone back to 8 years ago and say, hey, let's agree that there's got to be a better framework for driving that and it being more uniform. I'd say that's one really, really important thing that would have accelerated 2-3 years out of everyone's life. And I still think it's a challenge in some cases, the onboarding process for banks, for network, bringing new providers on. It's still something that everyone talks about and every bank brags at how they're the worst at it, which tells you just how bad it is. Because everyone basically says, oh, it's bad, we're the worst. And it's a bit like, okay, great. How about we try and fix that? That's the biggest thing I would say as the company is concerned, right? I think it's more one of making sure that you have to balance investors with your own sort of company profiles. To some degree, sometimes you end up succumbing to certain pressures, which I think in hindsight, you'd say, okay, we knew what we should have done and driven with that. So there's just a bit of experience there in my mind of being a first-time founder, but still having the experience of having been in business for the best part of 25 years, which means I'm not 23, which has got its pros and cons. And so standing by some of those convictions.
Yeah, it's funny. These entire processes do make me laugh. In few other places do I see real money spent on actual integration of a technology they decided to move forward with before the contract is done, because the legal and compliance process for going through the contract takes so many months that they're just going to green light the spend on tech integration already. It's like, wait, what? Just moving forward on good faith, this contract is going to close. But yeah, once they commit enough assets to it, it pretty much is. But it's pretty backwards when you think about it. The second question is, what's been the biggest challenge in the company to where it is today?
I think the biggest challenge today has been finding a consistent go-to-market approach with the banks that we partner with. We don't control, as much as I don't have to build a brand and I don't do those different things, right? It's finding the right go-to-market model with those issuers to make sure that whilst you're not controlling the sales motion, you are very much working alongside them to have a view on how that is happening. That's where we've probably spent the best part of the last 2 years, is doubling down on that and figuring out how do you truly get scaled across the different issuers by truly partnering, collaborating within their sales organization. Because really, when you try and sell a platform like ours into a bank, you sell it into product. The product isn't selling the product.
No.
Treasury teams are. And so I think that's probably one of the big areas, right, where you would think, okay, the go-to-market strategy there has to be a little bit different, especially in our case, right, which is I'm an extension of a product the client already has, right, as opposed to I'm coming in here to pitch you a whole new thing, which is a little bit different. So that's probably my answer to the second one, is earlier focus, better focus on the go-to-market motions.
Yeah. Good luck to you. Every bank gets its own form of little dysfunctions. So it is what it is. And some of them do pride themselves on it. But yeah, the levels, you need your internal champions. Otherwise, you're doomed. Okay. The last question for you is, what keeps you getting out of bed in the morning to keep on fighting the good fight?
What keeps me from getting out of bed?
What keeps you continuing to get out of bed?
Oh, look, I'm a naturally competitive person, right? So I like a fight, and it's almost, even though I have no Irish blood, I feel like I'm the combatant in all of this. I'm like, here we go. Never give up. But I think for me, it's really the commitment from my team, actually, frankly, is sure, I'm committed to make this work. What I really appreciate is the employees that sit around me, that they get out of bed every day, right? To make this a winning strategy and a winning mission. And it's a little bit humbling to see that over and over in terms of their ability to adapt. Clearly, I'm excited about the opportunity. Clearly, I'm excited about the market. What keeps me out of bed is really wanting to share that with them and seeing them turn up every day and give me the best of themselves on a daily basis. And that's really inspiring to me, right? Is to see these teams deliver so much with so little. It's really inspiring. Having come from large corp, right? It's great to see the dynamic that you get through being in a smaller company. Yeah, you don't have a brand, you don't have all these other things, but what you have is tremendous spirit. Why? Because by definition, you have limited resources. And when you have limited resources, you become pretty creative around how you're going to use those resources most effectively to have the biggest impact. So anyway, long story around what gets me out of bed, but I love a good team and I love a good outcome. So that's what drives me.
Scarcity breeds innovation. I will say that much. You're absolutely right. Andrew, thank you so much for your time. Greatly appreciated.
No, thanks, Jason. Thanks for the discussion.
So that was my interview with Andrew Jamison of Extend. Hope you like that. And if you're in the market for such a product, please take a look at their website at paywithextend.com. As always, if you enjoyed this podcast, please leave a review on Apple Podcasts, SoundCloud, Spotify, or wherever your podcast. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on iTunes, Stitcher, and Google Play, or find more episodes at jasonpereira.ca.